Hello everyone, this is episode 7 of Long Shots, our weekly podcast. Sharad, how are you?
I'm very good and it's good to be here as always.
Yes, it is, and today it should be even a better reason to be here. Today is a very special day, Sharad.
Yeah, why don't you elaborate a little bit on that?
Yes, so today is 18th October and exactly 1 year back we went live. So it's been 12 months since we started.
That's awesome. Time to level up now?
Time to exactly level up. Speaking of corporate histories, it's been now 21 years since a landmark company was started in the US. It's one of your favorite companies, Sharad.
We're talking about Netflix, aren't we?
Exactly.
Yeah, I imagine you'd bought a couple of shares when they went public. Public they went in 2002, I think, although.
Yeah.
But imagine you'd bought some of those shares. You'd be sitting in Monaco on a yacht right now counting all the money. I think so.
How much has it gone up?
Well, in the last 5 years, I think it's up 660%.
Right. Okay.
And, I mean, since 2010, it's up like 1600%. I mean, these are outrageous numbers, but I think it's fair to say that you would have been fairly rich.
Yeah, I invested in State Bank of India.
How's that coming along?
Yeah, I'm waiting for the upside now. It has really gone down in the last couple of months. So, things are only looking up now.
Maybe on our 10th anniversary of Transfin, we'll talk about how the SBI stock is done.
Yeah, believe me, Netflix doesn't have the kind of restructuring story that SBI has.
No, but talking about Netflix, I think it's worthwhile to just look at. It's always interesting to see their quarterly reporting.
Yes.
Last quarter was Q2 18, which the stock had fallen off. So this one, which they reported this week, was Q3 18, and phenomenal numbers, beating expectations in subscribers.
So when you're an investor of Netflix, especially if you're a bullish investor of Netflix, what is the number that you really look at?
Subscriber count, and subscriber count.
Okay.
And the fourth maybe is just top line growth.
Right.
But that's almost entirely driven by subscriber growth anyway.
Right.
But it's a subscriber growth story. Like, people talk about other issues like free cash flow burn and that they're not generating any free cash flow. And there are these yield sensitive investors who think that the lack of ability of generating free cash right now is a negative. But listen, if that's a negative, then you wouldn't have made all the money that the bulls have made on Netflix.
Right.
It's a growth story. I mean, they had 30 million subscribers not too far back, and now they're at 137 million subscribers.
Right.
This quarter again, they added up about 7 million subscribers, and that was ahead of their own internal forecast of 5 million. So now, it's very nicely.
Did they beat the Wall Street estimates?
Yeah,
as well?
they beat their internal estimates. They beat the Wall Street estimates. And as you would know, being in capital markets, these days the stories is when you beat, the stock goes up. When you miss, the stock goes down. That's what it's come down to. So the stock was up good 12% after market. And I think on the next day, Wednesday, which is, I think the stock rose another 5-6%. So overall a good quarter, and the stock is doing really well, and there seems to be a lot of growth runway. And there were some India specific comments as well, which were very interesting. They obviously see a lot of growth runway still in the Indian marketplace.
So India is where they recently went into vernacular content in some capacity, right? With Sacred Games, Ghoul and things like that.
Correct. And I still haven't seen Sacred Games. I know you have, and I don't know what your thoughts around it are, but that was the big ticket, high profile series with notable cast and crew behind the production, which came into existence, and they talked about it on the earnings interview.
Okay.
And obviously they say India is a key market, 250 million smartphone users and cheap data availability. Obviously India is a very key growth driver for them.
But what about price point, right? If you look at Netflix, I don't know how they are charging around 500-600 per month here.
Yes, correct.
And what they charge in 2 months is what Amazon Prime charges for the entire year.
Correct.
Right, and even Hotstar is even a more reasonable proposition. And there's always this perception that the Indian user is notoriously price sensitive. But I recall, yesterday when you were watching the analyst call, the management didn't seem very concerned about that.
No, they did not, and it's a great question and a very, very insightful thing to think about, because the management thinks that there's enough growth runway in the current price point.
Right.
So they're very comfortable with that. They haven't even scratched the surface, is what I feel. And they don't disclose the India specific subscriber numbers, so it's anyone's guess, but they feel there's enough growth runway. And second is, it's a price.
So in India, how many subs do they have? Have they disclosed that number?
They've never disclosed it, and they say it's for competitive reasons. So it's anyone's guess, but I'd suspect it's in low to mid single digit millions.
Right.
Maybe high single digit, but that's about it. Significantly lower than Hotstar and Prime for sure. But that's all we have.
Because Prime is at around 8 million, 7.5, 8 million in India.
Yeah, more near the double digit mark.
But that also is a very misleading number, because that's not just people who are watching Prime Video. That's also people who are looking at Amazon Prime as an e-commerce proposition.
Exactly. It's not a like-for-like comparison at all, because Amazon Prime Video is a bundled proposition with the whole Prime membership. So, there's e-commerce benefits and which are bundled in with the video platform. So it's not really a good comparison. And Hotstar is also not a good comparison, because a lot of their subscribers operate on a free model.
Right.
So it's you can't really compare. But the key takeaway is that there's a lot of growth runway. And the analyst was asking Reed Hastings, who's the CEO of Netflix, on in the international landscape, can you give us ex-India and India numbers? And obviously they said they're not going to do that.
Right.
But basically the point is India is a growth market and they're investing in vernacular content, and it should be interesting to track it going forward, and as they try to drive the next leg of their growth.
But like, you won't expect them to go like free cash flow positive in the medium term. They're not even thinking of that.
No, they themselves say that we're going to be free cash flow negative for years to come.
So how much do they burn per year?
This year they'll burn close to between 3 and 4 billion, closer to 3 globally. And next year as well, they expect it to be flat year over year. So again, they'll burn between 3 to 4 billion.
But it's interesting that I get it that they are a growth story and they are obviously pushing towards original programming, and that's kind of shows in the amount of money that they are burning and the kind of distribution power they have. It's very consumer behavior oriented, which is, I think, their main strength. But the global landscape is very different from what it was 10 years back. Now I think there's a lot of strategic M&A which is happening in the international domain. A lot more competitors now, right, for them to worry about.
Yeah, it's M&A, of course, like you said. I mean, the biggest one that jumps out of it is AT&T and Time Warner. So Warner, HBO, basically. That's the big prized asset in there. So there's deeper pockets.
Because HBO is, I think, very similar in terms of their premium positioning, right?
It is. It is a pay TV network in US. That's how it's positioned. Very rich original programming, coming off a big hit in terms of Game of Thrones, globally traveled. So they have the ability. And now that AT&T is behind them, there's more higher leverage to take it forward. And it's interesting, actually. You know what an interesting point in that is? That from an Indian perspective, Hotstar distributes HBO content.
Right.
So that's that's one of the value propositions of Hotstar, that you can watch Game of Thrones when it airs in HBO real time in India. So, but there are a lot more competitors. I mean, he does not seem too worried. I mean, Reed Hastings says that it's our job to get maximum eyeballs on our platform. He identifies even YouTube as a competitor, even video games and social media platforms. It's basically anyone who's any platform on the screen which attracts eyeballs is a competitor, right?
Right. I think that way it's pretty interesting, because they have obviously cracked the content game very well. Like, they have gone for original content. They kind of have a strict control on production values, and that way they have end-to-end visibility on how the product is going to come. But on the other end, they are a very sophisticated distribution platform, right? So I think that kind of gives them something which probably the HBOs of the world don't have.
Yeah.
And I think and that way, I mean, that data itself is the one that is probably making them so confident and cocky about how they're going forward, right?
Yeah, no, that's exactly it. And I remember some time back I was reading an interview. I think it was Ted Sarandos, who's the chief content officer at Netflix. He was saying, my biggest job right now is to find out what to show a user when he looks at the Netflix interface, the home screen, because I have like let's call it a 5-second, 6-second window, and I want to use that real estate to get the person hooked into that platform and never leave out of it. So it's tech driven, like you said, data driven.
Right.
So it's if Nikhil likes XYZ shows, they want him to show ABC as recommended, and they want to really nail that. So yeah,
they are strangely pushing a lot of crime and psycho killer stuff on my Netflix window. I don't know why.
Maybe it resonates with your taste.
I don't know, man. Yeah, lately it's been coming like Mindhunter. Those shows are always at the top.
Yeah.
Maybe I need to reflect on my choices now.
Yeah, maybe you should. Yeah, but while on that data subject, there's something happening in the Indian context on data localization, and there's a lot of noise and press coverage on the things that are happening, deadlines being missed, deadlines being extended. What's happening, and what's your high level view on that?
Yeah, so the background is that the Reserve Bank of India came up with a notification in, I think, mid this year, where they asked all payment companies in India, and overseas, but who are processing any transaction payments data of Indian citizens to save that on servers located in India.
Okay.
So they gave a deadline 6 months away, which ended on 15th of October. So this Monday.
Yeah.
So as soon as the announcement came in, the US companies, Visa, MasterCard, American Express, they all were very baffled, and they have been lobbying ever since that, there's a very high technology and compliance cost of this measure. And, let's just do some data mirroring instead of storing it physically in India. But the RBI has not budged.
Okay, that's pretty interesting actually. But the two things that you could probably, I'd love to hear your thoughts. One is the underlying logic from RBI's perspective security in terms of keeping data within the borders, and two, mirroring. Like, what exactly is mirroring? Is it just duplicate copies, or like how does that operate, and why is and what is RBI's opinion on mirroring?
So data mirroring is exactly what you're saying. That means that the parent data is saved or stored somewhere overseas, but a copy is made in real time and saved in India. So the finance ministry actually is more amiable to the data mirroring approach,
okay,
but the RBI vetoed it. And they are like, no, the actual parent data should be saved in real time in the country.
And can it be mirrored there?
Yeah, it can be. It can be, but that does mean that the overall technology infrastructure has to be set up here.
Got it.
And obviously, then RBI, as in its own words, will have unfettered supervisory access.
Yeah.
So quote unquote. So so that's why RBI is pushing for that. That's from a supervision perspective. But security agencies also do have a role to play here, because most of the Indian intelligence agencies have been pushing for quite some time that, when it comes to illicit transactions, when it comes to terror funding, a lot of time these transactions happen online, but when they have to, kind of make a query and get access to that underlying data, it takes days and days to get it because the server is somewhere in East Coast.
Yeah.
So, I think so RBI getting unfettered supervisory access, I think, is important. Obviously, the word unfettered has to be really observed closely. So there has to be some checks and balances into whose data they can see and whose data they cannot. And same applies to the security agencies.
Yeah.
But overall, the request, I think, is fundamentally in the interest.
Yeah, what would be, I haven't done any research on it, so my knowledge on this space is fairly limited, but I wonder what or how other developed nations are operating for the same things, like a UK or a Germany or a Canada or an Australia. I mean, we leave Americans aside because American companies are in question here, but what the ex-US developed countries are doing, do they have similar laws in place? Like, I'm not at all aware of this subject.
I think in Europe, like be it UK, France, they are all driven by the European Union regulation around this. So GDPR should be driving this entire debate there. Maybe not in UK in a few quarters, but I think there, at the end of the day, the checks and balances, the enforcements, the legal provisions, I think, are much more robust. So it's a kind of a more advanced example. US, as you said correctly, most of these countries are based in the US. So they kind of made their millions by storing all this data there locally. So this is probably not a problem that they are facing.
Yeah, it's worth keeping track for sure. And once all these data extensions and all these things happen, then...
it's worth keeping because it is now kind of taking a political spin in any case, because most of these US companies are now trying to lobby through Congress, through Senate. And, very interestingly, two US Senate, Indian caucus senators actually reached out personally to the Prime Minister saying that this can be a key trade barrier.
Yeah.
So there is obviously like a Donald Trump spin, which is kind of coming along this trajectory. And let's not forget, out of the 80 companies, a few of them have still not complied. And no penalizing action has yet come out in the public domain. So I don't know, like till now, RBI has been playing it very tough. How much pressure they can take in, only time will tell.
Yeah, so it seems like a wait and watch story for now, which brings me to the next topic, which I'd love to hear your thoughts on, is around current account deficit.
Yeah, speaking of waiting and watching, yes, that's a long-winded area, right?
Yeah, I think we've spent a fair bit of time talking about current account deficits and what is essential, what is non-essential, and every time the common underlying theme is oil and a depreciating rupee,
right,
which goes hand in hand because we are the biggest consumers of oil and fastest growing economy, 2.67 trillion in GDP. So let's talk about what is a short-term fix or what the thoughts are around tackling this issue of oil. There is an oil cartel out there which is historically traded and continues to trade in USDs. But let's I'd love to hear your thoughts on if there's anything, any insights on there, on maybe a political or an economic stance which would be somewhat different to status quo.
Yeah, no, sure, definitely. Well, as you said, current account deficit, lots of moving pieces there, but primarily it's a trade metric. It's exports, imports, and obviously inflows and outflows of investment.
Yes.
Right. So in terms of short-term fixes, a lot of things are going on. Right. That 5-point economic plan came out. External commercial borrowings are being pushed up. Masala bonds are being pushed up. So less sale of rupees, more inflow of dollars without transacting in rupees. Then the usual suspects of increasing import duties to bring down imports. All those things are happening, but they are all band-aid solutions. The biggest moving piece is crude oil.
Yes.
And this week, interestingly, the PM kind of went forward personally in that capacity, and he has been he met 40 CEOs of top oil companies, from Saudi Arabia, from other Middle East countries, and he's trying to restart the dialogue about some fundamentals of oil trade, like why is it that international crude oil has to be sold in dollars? Why can't we have rupee terms around it?
That's a big talking point, no?
Yeah, but it has been happening, it has been happening for years altogether. I mean, if you go through the entire history of this policy, every 5 years this topic comes up that, okay, fine, oil is a price inelastic product. There are a lot of, it's driven by Saudi Arabia, it's driven by US, but if you look at buyers, India is a big buyer. So why can't the buyers actually collaborate and drive the terms in some form or fashion? And India is an exceptional case because we actually have had some success with one particular country in that regard, where we are actually buying oil from them in rupees. We are getting a preferential credit term from that oil vendor.
Yeah.
And but that country, I don't think, is going to stay very long as an oil partner. It's Iran.
Yeah, I would have thought so.
So now I think the Petroleum Ministry and especially the PM is trying to push for the Iran model with the broader mix of oil producers.
Yeah.
Because, I mean, it's a fair point, right? I mean, you are asking, okay, there are sanctions on Iran, so don't buy oil from there. Then, okay, then you give similar commercial terms to what Iran is offering.
Yeah, no, correct. So we talk about a big seller cartel, and OPEC obviously jumps out.
Right.
Do you think, I'm just going to coin a new term called OSIC, which is oil consuming importing countries. Do you think that'll ever, there will be enough discipline or enough collaboration from the buyer's perspective to create a buyer's cartel? Because at the end of the day, I mean, it is a seller's market, but buyers who are buying in terms of how much they're consuming, especially the emerging markets and in this region, do you think there is something that can ever happen in terms of...
Yeah, definitely. It's a question of mobilization and how you actually structure it, right? Because say you are an oil vendor, I say that, okay, globally anyone will buy oil from you in dollars, but I'm saying buy from me in rupees. You would be like, why should I take the FX risk, right? Then I'll say, okay, why don't you buy some hedging instruments? You'll say, why do I buy hedging instruments?
It's not their business.
Yeah, it's not really my business to buy hedging instruments, and they have their own cost. So we have to create that framework where contracts are structured in such a way that these transactions can happen as seamlessly at the minimal cost. And it is possible, right? Like Britain and the US, through history, have again and again been through at least contemporary history, have again and again shown that the presence of a natural resource is not really the sole criteria for the presence of that market.
Yeah.
Right.
Yeah.
So if you look at Brent crude is a benchmark for oil, but it's based in North Sea. Yeah. North Sea is no longer driving the show when it comes to oil.
Yeah.
Right.
Yeah.
So I don't see that it's not possible, but obviously there is a geopolitical and diplomacy oriented angle which is related to it. So it's a very, very slow moving burn. And I think India can, in the local sphere of influence, can assert its position and maybe structure something out. But I mean, I've said a lot of things, but next year elections are coming. So, obviously after that only we'll see if this thing stabilizes and, pans out in the shape it should.
It's interesting. I mean, we don't want to take a political bent to our discussion, but it probably is an incentive to aim for short-term fixes rather than long-term solutions.
Yeah. So one can see that. One can see the sense in how they have been approaching it so far.
Yeah.
Great, Sharath. So yeah, I think it's time to sign off. Today was a fairly detailed discussion.
Yeah, no, I thoroughly enjoyed it as well, and as always.
So it was kind of an anniversary special, like twice the length of you usually do.
Oh, was it really?
Yeah, yeah. With you, man, time just flies. Okay, on that note, so yeah, just to kind of give a reminder to our listeners, we are now also streaming on Spotify, Deezer, Google, and Apple Podcasts. So do check us out there. And yeah, so this is Nikhil
And this is Sharad.
signing off.